Hey, welcome back to Everything Money. We're glad you joined us again. Paul, over 900 videos. We've been working here the last 3 years, and I congratulate you, my friend, for your hard work and commitment to the channel. Our patrons and our Everything Money community also are very thankful. But I'm thankful to be here. We're talking about NIO today. Paul, there's been a barrage of two facets. Obviously, this past 18 months, an incredible barrage of EV excitement. Anything EV, whether they can actually make a vehicle or not. Literally, some of them are just plugging in cardboard videos and rolling them down a hill.
Rolling them down a hill, baby.
And so EV is the best thing ever, of course. And the caveat to that now, Paul, is Chinese companies have come into the sweet spot, as Mo would say, in our evaluation, in that their fundamentals are rising. They're making a ton of money and have been for years. They're great companies like Alibaba, Baidu, and their stock price is falling. One of which that has been all over the place and a real topic for the past year is NIO. And a lot of times, Paul, you're okay. What are you into? What do you have already?
Well, first off, follow us on Instagram.
Okay.
Secondly, this is the number of cars NIO sells in a year. 2019, 20,500. 2020, 43. Halfway through the year in 2021, we are at 27,000. So they're definitely growing, right?
Yes.
Now, immediately I go to market cap. $60 billion market cap. So they sold,
oh boy,
they're going to sell 60,000 cars this year, call it $60 billion market cap. Let's go to Ford. $51 billion market cap. $51 billion market cap. Let's go change this.
Oh, wow. NIO's more than Ford.
Ford sold 4.2 million vehicles last year, 100 times NIO's.
Oh, wow.
100 times more cars. So even if you thought NIO was going to become Ford, you're still paying more for NIO before it even becomes Ford.
People are saying NIO, mentioning Ford is just silly, Paul, because NIO is going to be way better than Ford.
Fine, they could be way better. Let's see how much better they are. Ready? I'm going to go to the income statement, gross margin, gross profit. Their gross profit on a car is $19.93 billion on $136 billion, 14.65%. So that's Ford. Sorry, that's Ford. Mm-hmm. That was Ford. Let's go to NIO. So 14.65% for Ford. NIO is $750 million on 4.3 billion. Sorry, 750 million divided by 4.3 billion, 17.4. So 3 percentage points above. Mm-hmm. Still a lot, but is that really that much better than Ford? They should have double, they're not that much better. Do they make electric vehicles? Great. Electric vehicles.
See what you're saying. So,
it's not like they make that much more money per car than Ford does on a per car basis. For me to justify a really big difference in valuation, I would need to see a ton difference in gross margin. But you're not seeing that. What you're seeing is a car company that sells 47,000 cars last year. They're going to do 60,000 this year, and Ford does 4.2 million cars, and they're worth less than the company that does 60,000 cars. You might sit there and say to your blue in the face, Paul, it's different with NIO. Fine, it's different. You are smarter than me. You understand that paying, but guess what? I have 600 apartments. The largest apartment owner in the country has 150,000 apartments. Give me a higher valuation. Why? Because I have more growth potential. Does that make sense?
No, I don't.
No, wait a second. But we're sitting here talking about math. I have 620 apartments versus 150,000 apartments. Using the same logic of NIO, I should be worth more than this company. Using the exact same logic as NIO. Well, NIO sells 47,000 cars versus 4.2 million cars.
I see.
I should be worth more than this largest apartment owner. Now, the numbers aren't exactly the same. This is 100 times, this is like 250 times. I get that, but fine. Versus an apartment owner that has 60,000 apartments. Should I be worth more than them? Because according to your logic, I'm different. Why am I different? I'm growing. I'm using more technology than these old farts. Does that make sense?
Wow. Obviously, no. There's no way to.
If you don't get this.
Thank you, Paul. Tell him.
If you don't understand this, I have one word
Send him.
to describe you. If you don't understand this.
Send it, baby. Uh-oh, what is this? Oh, no.
You are stupid. STUPID. You are stupid.
Ain't nobody got time for that.
Do we all understand that?
I've grasped what you've written there.
You are stupid if you think that 47,000 cars versus 4.2 million is better.
But Paul,
$60 billion market cap, $51 billion market cap.
If I
17% gross margin, 14.3% gross margin.
if I'm a new investor, which we welcome you in, and
Go buy ETFs because if you don't understand this, you are the enemy of your money.
But the
you literally fight your money every day. How can I kill you? You're like, oh, here's my money. Let me kill it. Let me kill it.
But
You're
there's
really
this,
good.
but there's this warm guy who's very nice in a basement that has made hundreds of videos of how wonderful NIO is. In fact, we have 2 videos where at some point he says, by the end of this year, NIO will be a $100 stock.
It could be.
And then another video very soon after says by the end of next year, it'll be a $100 stock.
I don't know where the stock is going to go. All I know is if you have 100 NIOs and you buy based on this versus this and you think this is better, you will lose a ton of money. Not just a lot, a ton. You will lose so much money that your wife will leave you, your
Paul.
kids will disown you, and then when I'm done having sex with your wife because she found somebody smart,
here he goes again.
Your kids are gonna ask to be adopted by me.
That's true. You have plenty of money to adopt kids.
I will just adopt tons of kids.
You have plenty of room.
Paul has at least 14 kids. Paul has more kids than they have cars.
He's got 14 bedrooms, 14 new bedrooms in the mansion. So Paul, let's get it this way, because the same guy who's been propping up NIO since the beginning of time, Stock Moe, he said this week that their new issuance of shares
is a good thing?
Absolutely.
Oh my Lord.
That when you bring up
how many shares did they issue?
Bring up the news.
Oh, that's the one I sent. That's the one I sent you guys.
Yeah. So they've issued 2 billion new shares. This is last year they issued 2.65 billion, and I mean dollars. They are 50 million new shares yesterday in the news. 68 million last year plus 85.5 million last year. So total of 206.5 million new shares issued in the past.
But what was their issue base?
12 months or something?
What was their issue base?
Yesterday was like 40 yesterday. And there was some that were $17.
So they increased their, okay, so guys, let's finish this whole thing.
It's been $6.15 billion.
And I want to explain to you why issuing shares is bad for an investor.
Before you do that, I would like to explain what Stock Moe is saying, is that this is great for the company. It will help them grow.
Why?
And
that's possible. That's true. They'll take the cash and grow. That's true.
Other people argue, is that this will help their market cap and allow new people to buy the stock.
Why?
No, it does not help the market cap.
Why does he think that? Did he give a reason, or did he just say those words?
By the way, he is right. It'll help them grow.
Right, but I'd like to see if it dilutes why he thinks that.
So guys, let's say a company makes $10. They have 10 shares. It's $1 per share. Mm-hmm. Let's say they issue 5 more shares. They go to 15 shares. And they're able to grow and increase their revenue by 50%. Oh my God, their revenue's up 50%. Guess what? You're a shareholder, you still get $1 per share.
Your revenue
You got $1 per share before, you get $1 per share now after. They increase their profit by 50%. That's what dilution does. Now, if they can issue 15 shares and take this to 40, got it, understood. Now you're split, let's say 45 to make it easy. Now you're making $3 per share. The company went 4.5 times higher on profit, and their share per share only went up 3 times higher, but the point is it's still gained. Dilution hurts you. It does not increase market cap, and if it does increase market cap, it does it temporarily and to the new issuers of the new stockholders. This is ridiculous. This is absolutely ridiculous. If you believe this, I would tell that person you need to go back to high school and do what all high school teachers do, which is teach exactly what's in the textbook, and that's it. Don't give your opinion because your opinion is wrong. That's it. Just stick to the textbook.
Why are you
2 + 2 is 4.
Why are you so adamant about combating sort of hype stocks like this, and how?
Because it gets people to go chase this dream that doesn't occur.
And the reason
it doesn't work in the long run.
The reason I kept questioning you and saying, why did he say that? Just if he has a reason, right or wrong, at least he's putting out a reason. I want to just saying words and not having any thought behind it. That's what you need. That's what when you listen to these idiots, you need to understand saying words mean things. There has to be something behind them. That's why I was saying, Seth, why? I want to know. Give me a reason.
This is not the first time that we've heard that
people
issuing
are
shares
morons.
is just a really great thing, and all companies do it.
I love it when I hear that because then I just go, oh, those people are going to be so broke. I love the fact that
I'm
there's
so
going to be so many
excited
people
for
out there
that.
losing a lot of money.
I'm being a vindictive SOB, but I
That's
can't
true.
wait until you're.
That's the other thing.
I'm a
broke.
terrible person, but
I
I
was
look at it
gonna
going,
say is-
you
like,
need to learn
at
your
this
lesson
point,
the
it's
hard
really
way.
pissing me off.
Yeah, you need to learn the lesson the hard way.
Yeah, I think in the end.
Because even when I miss out, and Warren Buffett always says his biggest mistakes are his mistakes of omission, not commission. You know what I mean? You guys are all going to make mistakes of commission if you buy things like this, which means when you buy things that aren't the right thing. I'm fine not buying something and it goes 10 times higher. You're not because you have FOMO. Go learn a different method. This is the method of being confident, saying, listen, I have my sphere of influence. I know exactly what I'm doing here. I'm going to buy these stocks. Anything outside of that, if it goes up, great, fine by me. I didn't buy a piece of the Miami Heat 12 years ago, lost out on tens of millions of profit. Why? Because there was something specific in the deal that made me go, if I'm wrong on this, I lose everything. I wasn't willing to lose everything. So I said, okay, I'm not going to do it. And guess what? It never ended up happening, but I thought it was actually literally was being told this will happen by the majority owner. I am going to do this. And I was like, and then my lawyer was like, yeah, but you can fight him. He's worth $6 billion. I'm not going to fight the guy in court. He can bury me in legal fees. I made the right decision at the time. Did it end up being wrong? Yeah, but if I do that 100 times, I will end up saving more money.
Yeah, so the point of all this is we want to teach you perhaps a more diligent and disciplined way of looking at companies, actually what they make, not looking at YouTube videos like some of our fellow not financial advisors out there.
Stupid people.
Our colleagues.
Colleagues, I would say, yes. So anyway, folks, be careful with NIO. It is not like Alibaba. They do not have a long growth stream of revenue and are currently cheaply priced. They are exorbitantly priced with very little really selling any cars at all, right, Paul? I mean, it's just
Yeah.
it's be careful, as we always say.
Follow us on Instagram.
Follow us on Instagram. Follow the thumbs up. Thanks for watching.